My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach, and put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. This earnings season, it has suddenly gone completely schizophrenic. Which is how you get a day like today where the Dow lost 129 points, S&P sank 0.53%, the NASDAQ nosedived 1%. For the first 2 weeks of earnings season, things were pretty straightforward. Sure, the business side of the economy might be, let's say, slowing down, but the consumer was doing so great, backed by a strong job market, higher stock prices, and they were, gotta tell you, it was offsetting any industrial weakness. This week, it's a totally different story. The market's no longer on its meds. While two-thirds of our economy is consumer-oriented indeed, the other third has gotten so bad, so fast, that it's crying out for some kind of government intervention. That's what caused today's weakness, because the non-consumer economy is just plain worrisome. Later tonight, we're speaking to American Electric Power. You know, that's the largest power transmission company in the whole country. They just reported this morning, if you're trying to get a read on the economy, there's nothing better than talking to them getting the power data. So it took my breath away when I heard CEO Nick Akins, calm man, say the biggest economic headwind we have at this point is the impact of the trade war on the businesses in AEP's service territory, end quote. He continues, quote, the increasing number of tariffs on goods beyond steel and aluminum have impacted export manufacturers in our service territory. Certainly, the trade wars have weakened the world economy and caused a strengthening U.S. dollar, which adds even more of a hurdle, end quote. I'm going to ask about this change when he comes on the show later. I mean, but you need to know it. It caused a dramatic 4.6% decline for the companies in his area that are non-gas related. That's stunning. I mean, these are companies. What was % decline in power use? Hey, do you know that the steel's down 1% in power use? I thought that's what the tariffs supposed to protect. I sure hope that Jay Powell, our Fed chair, recognizes that what he needs to do is what I'm doing. He needs to check in with outfits like AEP, the largest transmitter in the country. If he talks to them, he'll understand that the tariffs are really decking part of the country. Again, I've been supportive of the trade war with China. It is time. This is still the best moment to crack down on their deeply unfair practices. And I knew there would be some short-term pain, but holy cow, it's turned into a real doozy of industrial downturn that needs Fed help. Now, while the consumer's still in good shape for the moment, you got to wonder how long that can last if the industrial economy is experiencing such a severe slowdown. Of course, it takes two to have a trade war. And having listened to most of the conference calls for big industrial companies, I think China is getting hit much harder than we are. The conventional media will not cover this story. I want you to look at 3M. This morning when the company reported, the headlines looked good. The stock popped in pre-market trading. It was up 8 points at one point. Once the conference call was digested, though, it shed all of those gains and then some. Why? I think because 3M seems to be experiencing an appalling slowdown in China, which had been their savior for so many years. I'm used to hearing that Venezuela's been a big drag on the quarter. Maybe Argentina, Brazil, Turkey. I never thought that China would be the source of such weakness. Yet it's almost become axiomatic. It's a given. Listen to what 3M CFO Nicholas Gangstead had to say. He pretty matter-of-factly told us, quote, for the year, we now expect organic growth in China to be down low to mid-single digits versus a prior expectation of flat as we continue to experience challenging end market conditions, particularly in electronics and automotive industries, end quote. Low to mid-single China. That was the savior of American industry. Electronics and automotive? Wait, isn't that what all our companies moved there to sell? Hey, it wasn't just coffee, right? It wasn't just Kentucky Fried Chicken. This feels bizarre to hear that Brazil, Canada, and Mexico were all much better than China. Brazil, Mexico, who knew? Here's the thing about this slowdown. If it pressures the Chinese government to make a deal, that's great for our companies. But if China just digs in and takes the pain, it's a real problem for the rest of the world. Their pain is not our gain. We see this across the board. Yesterday, Caterpillar disappointed, even as management maintained their full-year projections, which allowed the stock to bounce back today. One reason I thought Cat could have a relief rally, though, is that China's now become less than 10% of their book of business. That's a godsend. Can you imagine a machinery company? Then there's Dow Chemical. All right, I used to recommend the stock in part because of its exposure to China's fast-growing economy, the need for plastics in China. And while they had some decent items in the PRC that they sold, polyester, Sold to you, pal. CEO Jim Fitterling made it clear that the Chinese economy is, and I quote, having some big pressure right now, end quote. Fortunately, Dow's U.S. business actually offset the Chinese weakness, allowing them to make the numbers, but the stock got pummeled anyway because of not so great forecast. In short, China's in terrible shape. How terrible. Okay, get this. Later tonight, I didn't set the show up like this, but it sure seems like I did. We're going to talk to Align Technology. That's the maker of Invisalign braces. Its stock plummeted $74, 27%. Now, U.S. business is cool, but the real source of weakness? Tougher consumer environment in China. It fell off a cliff. You're going to hear Joe Hogan tell you that China fell off a cliff, and they're not even getting their teeth straightened, for heaven's sake. Another guest, Richard Fain, CEO of Royal Caribbean. He's going to tell us a similar story about the faltering Chinese consumer when it comes to cruise lines. I wonder how long the Chinese can ignore it. Of course, it's not just the trade war that's got me worried. I mean, look, for years, aerospace has been one of the greatest secular growth themes in our manufacturing. But we just heard from Boeing, and if the delay from the 737 MAX problem continues, they may need to stop production. That used to be their number one plane. Boeing's makes up a huge chunk of American manufacturing capacity, or I should say remaining capacity. If they have to halt production, that could shave 0.5% off our gross domestic product. That's a tailwind turning into a headwind, and there's nothing the president or the Fed can do to stop it. Tesla got hammered today, down 13% on weaker sales. The conference call was otherworldly. Given the demand story that Elon Musk traced out and the $5 billion war chest he's sitting on, you would have thought the stock should have been up $36, not down 36. But I have to wonder how much of Musk's confidence comes from potential sales in China. I don't know if you can still count on. All right, Tesla's not a Ford. It's still a car, though. And the Chinese numbers we got from Ford this morning were atrocious. These days, you can't count on the People's Republic to buy anything except perhaps coffee, where Starbucks grew some same-store sales an astounding 6%. Well, that's a good sense of priorities, Chinese. Here's the irony. You know what was the star of the whole day? And I'm including after hours? No. This is like being a favor. I do this as a favor. Like he's looking at his thing. I ask him questions. He's like, so, David? It's Alphabet, which is soaring in after-hours trading because of a gigantic earnings beat. You know what the greatest part of Alphabet is? They are not in China. For how many years do we have to hear that not being in China hurt them? This time it's a charm. Now, we know there are pockets of strength in the economy. Retail spending, big box spending continues unabated. Although Amazon, after a big run of better-than-expected quarters, took a breather tonight because of a heavy spending cycle that I told you was going to kick in when we did our game plan. And while the most recent mortgage application data shows a decline, low single digits, housing's still pretty good. But the industrial economy is so weak that Jay Powell now has plenty of ammo to justify cutting interest rates. And if the president rolls out new tariffs on Chinese imports and that $300 billion, if oil goes down, then one rate cut will not be enough. Here's the bottom line, people. As I've been saying since this earnings season began, we have two economies in this country. We have the manufacturing economy and the consumer economy. For the moment, they are very out of step with each other, the former doing badly, the latter doing well. This industrial weakness is a serious problem. It will not go away unless the Fed steps on the accelerator and does so soon, if only to offset the weakness being exported here, of course, along with their air pollution from China. Jeffrey in Washington. Jeffrey!
Booyah from Seattle, Jim, home of JWN.
That's right. I forgot. Yeah, they got to get that thing lives on the 52-week low list. I got to give him a new address. What's up?
Oh, it's fast. I mean, internet sales, they're open in New York at the end of the year, and the dividend's over 5% right now. Do I need to buy this thing and hold on to it?
Look, my Chapel Trust owns Kohl's, and that is
the house of pain.
And you are talking about a complete housing complex of pain. I'm going to say stay away from Nordstrom. That is, look, the days of Nordstrom's greatness may be waning. Maybe you get a little pop up to 36, but that's not what we're about. No. All right, now we're going to go to Kevin in California. Kevin.
Hi, Jim. I'm Bonnie. My son Kevin has a question for you.
Sure.
Hello, Jim. Booyah. Thank you
Booyah.
for taking my call.
Of course, Kevin.
We're big fans of you and your show.
Thank you.
I'm 10 years old, and I'm from Burbank, California. I'm looking for another stock for my portfolio for college. So what do you think of Dunkin' Donuts after its deal with Beyond Meat?
I think Dunkin' Donuts is doing quite well. I happen to like that new CEO very much. He tells a pretty good story. The Beyond Meat deal is just a little bit. I had the sausage, and I tell you, it is killer. I really, really like it. Not enough to move the needle, but for a 10-year-old who's got a long time frame, long time horizon, I think Dunkin' Donuts will do just fine. Beyond Meat, a little too hot for me, but I understand the ethos, and I bet you one day Kevin is going to say, you know what, give me a burger, a Beyond Meat burger. They were serving Beyond Meat hot dogs in front of the exchange today. I took a pass. Let's go to Amy in Michigan. Amy.
Cramer!
Yes, Amy.
Booyah!
Booyah.
Booyah. Thank you so much for helping women to invest.
Yes.
I am 2 months new to the market, and about 10 days ago, I picked up Snap. It was a tip from the younger generation, my ex-millennial boyfriend. I liked the concept, I liked the chart, and it filled two of my criteria. Management, I was impressed that Evan Spiegel walked away from a $3 billion offer from Facebook. And innovation, I only want to be involved with highly innovative companies. So my question for you is, should I hold it? Will the run continue? What do you think of the stock?
Amy, I completely agree with you on absolutely everything you said. It was innovation. It was an innovation-orama on that conference call. It was terrific. I'm going to go see Evan Spiegel. Now, of course, he hasn't invited me, so it's probably going to be like me being a stalker, and I've had those, so I know how to do it. But that was a great quarter. You are absolutely right. I was kind of blown away that the stock didn't go right to 20, as it should and as it will. You are doing real good work. How about our callers? How smart are they? They make me feel such an idiot, like when Align Technology comes up. My line... Invisalign. I should have known. Do you think I need it? Abe Leibowitz's work is finally not working. See that? All right. It's a tale of two economies. It's the consumer economy and the manufacturing economy, and it's the Dickens economy. And now they are divided. Will they stand? We know what happens to a house divided, right? Well, man, money tonight. Royal Caribbean reported a puzzling quarter for the second consecutive in a row. What's up with that? I got the CEO. Then yikes, the maker of Invisalign that I just mentioned plunged nearly 30% after earnings. I got the top brass. We got to find out what the heck's going on there. And don't bolt just yet. I've got the CEO of AEP up more than 20% for the year. What is going on? Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.